traders, welcome to the TMT stock market strategy video for Tuesday, April 19th. Apologize for the voice. Please bear with me for the next few days. I'm just getting rid of a head cold. I've been sick for the last 4 or 5 trading days. So again, please bear with me on this, all right? Anyway, let's get back to the markets here. Yesterday we had a reversal on Doha, which really nothing happened. And right on the opening here at 9:30, we actually catapulted pretty much straight up into lunch. And then lunchtime we did nothing, sideways, as we always do. And then the last, obviously, short covering rally at the end of the day. So if you were a day trader, you did nothing today. Right? Now, why? And I've gotten some emails, can you get in here? Yeah, sure, you can. If you can close your eyes and just get into a trade, that's not trading, right? Trading is you follow your your plan, your trading methodology, and you deal with it and you stick with it. You don't deviate from it. If you deviate from it, you lose money. At least I know I do when I do that. So yesterday was a nothing day. Obviously, when you rally up here and then you go sideways, you wish you would love to have some sort of a pullback into like some sort of a support, a moving average, and then get that other trade back. But that didn't happen yesterday. So pretty much a wasted day. And it was on extremely low volume, by the way. So the volume was very, very low. And I'm going to show you a daily chart. But what I want to show you here is what happened pretty much most of April. We have gone nowhere, okay, other than some gap ups, gap downs. But if you look at it, April, we've gone nowhere. But the last couple of days, we had one gap up on the 13th and then one gap up on, the reversal we had yesterday. Those are the only 2 days that actually had any type of movement on outside days. We did nothing here all of April, and we had pretty much half of March to deal with that we did nothing in March at all. So we've had really 2 big decent days, which the reversals, if you didn't catch that, you did nothing anyway. So this is what we've been dealing with. Why? The reason why I'm showing this to you is that we've gone sideways pretty much the last 5, 6, probably about, I would say good 3 full weeks of trading. But the markets are ready to go, and they're going to go one way or the other. They're going to decipher which way we're going to go up and or down. We don't know until price starts to break out. I put over the weekend a special edition video about how I believe the markets are ready for a bigger move to the downside versus the upside. Why? Well, earnings have been dismal. I mean, really just terrible. And we're up again this morning right now. We're testing 2097 in the ES and the electronic trading. So nobody cares about earnings anymore. Nobody cares about what's good. Valuations, they're extremely high. Netflix missed on the they didn't miss, but their subscribers are not doing well. Their burn rate is huge. IBM did miserable after hours. Rambus sold off after hours. A lot of the banks, they cut on expenses and executive pay. That's the only reason why they beat. So it's not looking so great. We do have Google coming on Thursday. It's going to be key. We have Goldman Sachs this morning. Keep an eye on your earnings calendar, guys. Very important. But they're not doing well. And at one point in time during earnings season, I do believe that you're going to have some big funds start really selling hard into this rally. There is absolutely no reason why the rally should be sustainable here. Valuations, earnings is quite good enough for the market to start to sell off. But we only trade what we see. And until that happens, you still have to trade to the upside. As much as it's uncomfortable, otherwise stick to the sidelines, okay? Just want to let you know. But I'm going to show you 2 indicators where there's going to be reason enough to start looking to watch for sellers coming in. NASDAQ, stocks above the 50-day moving average, 96%. There's almost no more room left. 96%, guys. And every time we get up into these areas, we get a market sell-off. Very, very careful. Be careful is what I'm saying. Okay? Next. Stocks above the 50-day moving average. What's that say? 95%. Very, very stretched. Okay? When you get to these areas, you have to take note. As a trader, whether you're a scalper, day trader, swing trader, position trader, you need to take note of what's around you. And as this market continues just to go higher and higher on gap ups and sideways consolidation, as much as it's fantastic for the longer term person, I'm actually being more cautious and cautious until we get some sort of a pullback. And I do believe that's going to happen in the next 2 to 4 weeks. It might even happen sooner rather than later, actually. All right, now let's go into the indexes. You can see here these spiders. We popped up. Actually, excuse me. Again, that was that reversal yesterday. We didn't even pop up. We just reversed on Doha news that nothing happened, and then sure enough, we just rallied. But you could see here, clearly we did nothing for about 10, 12 trading days. All of April, we did nothing. And then we had that one pop here, and then the one pop yesterday. And look at how stretched we are. All of the volume, all of the indicators are starting to roll over now, giving us some negative divergence as price is moving higher. So, again, a word of caution here. Yes, we are going to trade the same side of the trend, and that's how we're going to continue to do so until the market tells us otherwise. But you need to be ready, because when fear hits, it's very fast, and you don't realize it until it's too late, and then you just missed out on a big trade. Transportation sector. Yes, above the big trend line area of now it was resistance support, but again, lots of supply up here. We'll reach in some overhead resistance, big overhead resistance. Now it could go all the way up to here, sure, or higher. I don't think that's going to happen. Negative divergence as price is moving up. So again, be careful out there. Okay. Next, IWM, the laggard, the lagging index. Excuse me, which is our leader. One of our secondary leader, aside from the transports, is lagging. This is not a good sign as well, but could play catch up. And what I want to show you is you can see here back again into some big band of resistance right here. Okay, and we're starting to roll over again. So again, negative divergence here. You got to use caution when you're trading, even when you're scalping. You have to know what's going on around you. And lastly is the Qs. You can see here again. Apple's been getting really hit pretty hard here. So what I want to see is, and again, it's not as weighted as much as it was back then in the Qs, but I want to see what happens today with Google. Netflix didn't do well. Let's see if NASDAQ starts to weigh on. Let's see if Netflix starts to roll back over again. But I think the culprit may be the technology sector, and you got to be very careful here. And also, keep an eye on those banks and financials. They are not doing well at all. Aside that they beat, Morgan Stanley was really weak yesterday on their beat, and they beat on cost cutting. That's just not enough for me. If I was an investor of Morgan Stanley or Citibank, they beat on cutting executive pay. What does that tell you? There's no growth. Where's the growth coming from? So guys, be careful out there. I'm telling you, there's something big going to be happening soon. In the next 2 to 6 weeks, you're going to see something really big happen. And it may even be to the upside. But you cannot have gold continually rising. All of the commodities starting to rise. And I get it because a little bit of the dollar. But you can't have that. Equities rise. And also bonds at certain times rise. And crude oil rise. Something's got to give. And you can't have every asset class going without a break. So be careful out there. Please use your stops. And make sure your analysis works with my analysis, okay? Have a great day. We'll speak to you tomorrow. Take care.